Let's get straight to rates. We saw that massive move up in yields. It has now, died down a little bit. We're at 3.15 on the 10-year. Where do yields go? What about inflation, which you warned of at the beginning of the year?
Okay, I'm on the more favorable side of both inflation and interest rates, meaning I think they're going to rise, but not as much as some people fear. I think you could see 3.25, maybe even 3.5 in the 10-year. My guess is 3.25 or something around there will be the top tick for this year. Maybe we'll get to 3.5 next year. I think inflation is going to remain subdued. I think we'll see more of it. It'll probably go above 2, but I don't think it'll go as high as 2.5 on the consumer price index. So I think both will remain restrained, and therefore interest rates won't go to a fearsome level.
Well, exactly. I was going to ask what the ramifications would be for the U.S. economy then.
Well, I think the economy is pretty powerful right now. I think the Fed will tighten again in December. I think they will tighten at least 2, maybe 3 times next year. And I think they're right to move toward a normalization of rates. That's what they're doing here. Interest rates at the Fed level have been much lower than they have been historically, and they're trying to move them up to something close to the historical level. And I think they're doing that, and I think that's the right policy, and I think the economy can stand that.
Byron, what happens to the dollar in that scenario? A lot of investors I'm talking to at the moment are looking for entry points into the emerging market. But what is stopping them at the moment is a concern that the dollar goes significantly higher or even higher. What is your outlook for the buck?
Well, one of my 10 surprises this year is that the dollar would come to life, and it has. I think it'll probably go somewhat higher, but not a whole lot higher. And I think you're right to be looking for an entry point in the emerging markets. That's the truly undervalued part of the market right now. But I also agree with you that the dollar has to stabilize before that opportunity can be realized.
Byron, the other factor in that trade as well is the concern around what's happening with the trade story between China and the United States. Chinese equities have been absolutely slammed. And again, people are looking for an entry point. But the trade story is one of the other factors that's holding them back. How big a factor do you see this being going forward? And do you think it will potentially prevent people moving into that EM position? I
think we're right to be tough on China. I think that China enjoys too favorable a relationship, and they've abused it. I think we have a situation where they've confiscated American technology. They've taken advantage of us in joint ventures. The tariff schedule with them is too favorable. So I think we're right to negotiate on a tough basis with them. But having said that, I believe that next year we will have a deal with China. The Chinese economy has slowed down more than they had anticipated. They don't want to have a hostile relationship with their most important trading partner. And so I think we'll see a deal, but we won't see it until next year.
Byron, I know you're not going to make us wait until January or December for your 10 surprises for next year. Give us a little hint, at least as to the themes you're thinking about.
Well, I think if the crescendo of negativism rises, I think that's going to be wrong. I think next year will probably be another good year. Maybe not as good as this one, but another good year.